A very important student loan forgiveness deadline is approaching. Borrowers who want to qualify for student debt relief or credit toward loan forgiveness may have only a few more weeks to take action. But because of the timing of this deadline relative to full implementation of a separate student loan repayment program, coupled with ongoing loan servicing problems, there is a distinct possibility that the Biden administration could push out this key date. Here's what borrowers should know. Through a program called the IDR Account Adjustment, borrowers can get past loan periods counted toward the 20 or 25 years needed for them qualify for student loan forgiveness under income-driven repayment plans. Historically, only time spent in an IDR plan can count toward loan forgiveness. But under the account adjustment, other past periods of repayment, as well as certain earlier periods of deferment and forbearance, can count, too. Already, hundreds of thousands of borrowers have received student loan forgiveness under the initiative. These past loan periods can also potentially be credited toward loan forgiveness under the Public Service Loan Forgiveness Program for periods of qualifying nonprofit or government employment. Importantly, periods prior to loan consolidation can count toward loan forgiveness under the adjustment. This is notable because under the previous program rules, consolidation would erase a borrower's PSLF and IDR progress and reset their repayment term. Under the IDR account adjustment, not only can borrowers retain their past IDR and PSLF payment counts, but they can actually maximize it, as the Education Department will credit a new direct consolidation loan with the highest number of PSLF and IDR payments based on the histories of the underlying loans included in that consolidation. Many direct loan borrowers will receive student loan forgiveness credit under the IDR account adjustment automatically. But those with commercially held FFEL loans and other non-direct loans, and people whose loans have varying repayment histories and who want to maximize their IDR or PSLF credit, must consolidate their loans via the Federal Direct Loan Program by December 31, 2023, less than 9 weeks from now. Borrowers with pre-existing PSLF and IDR credit who consolidate their loans after December 31, 2023 could be in for a surprise. Since the IDR account adjustment is a temporary initiative, the rules would revert to current regulations, rather than the temporary flexibilities provided by the adjustment. For PSLF borrowers, that means that new regulations that went into effect as of July 1 would govern new consolidation loans once the IDR account adjustment deadline passes. Under these new rules, starting in 2024, borrowers who consolidate loans with existing PSLF credit would receive the weighted average of that PSLF credit on the new direct consolidation loan.